Hi, welcome to my podcast today. We're talking about deducting automobile expenses correctly, what the IRS actually looks for and allows. If you're a small business owner, gig worker, freelancer, S corporation owner, this video is for you. Whether you drive for your business a little or a lot, your vehicle can be a tax-saving asset, but only if you deduct your auto expenses correctly. I'm Sherry Borshoff. I'm a tax strategist and enrolled agent. And in this video, I'll walk you through the two methods the IRS allows for deducting vehicle expenses and how to qualify and how to make sure it sticks in an audit. Two IRS-approved methods are mileage versus actual expenses. These are the two ways that you can deduct your vehicle expenses on your tax return. The standard mileage rate versus the actual expense method. If you choose the actual expense method, if you own or lease your vehicle, but once you pick one, you may be locked into that for the vehicle, depending on how you file in your first year. So let's break them down. Standard mileage method is the simplest and often the safest option. For 2024, it's 67 cents per mile. So what you have to do is you track your business miles, you keep a mileage log, you multiply total business miles by the IRS rate, and then tolls and parking are extra deductions that you can take on top of that. This method includes the actual method includes gas, oil, insurance, maintenance. It's baked into, this is all baked into the rate of the standard mileage deduction. The actual expense method lets you deduct a percentage of your total vehicle expenses based on use. That includes the gas and oil expense, the insurance expense, registration fees, the repairs and maintenance, lease payments or depreciation if you own it. The example is if you use your business vehicle for 60% of your travel, then 60% of the costs of these is a deductible business expense. Repairs for keep receipts for every expense. Common mistakes to avoid are what gets people into trouble is not keeping a mileage log in either of these two methods. You must keep a mileage log because that is your proof that the car, the vehicle that you're using is being used for business and not just personal. You have to keep track of all your mileage, business and personal alike, on your mileage log so that you have a clear and documented proof that you use the vehicle for business at a certain percentage of the total mileage that you drive during the calendar year. You need to keep figuring out which method works best for you. Keep your records clean and do this throughout the year instead of trying to put it all together at the end of the year or, God forbid, when the IRS comes knocking and saying that they want to examine this. If this is helpful for you, please like and subscribe for more real-world tax tips, and check my video on doing mileage right if you want to learn how to create a bulletproof mileage log. My name is Sherry Borshoff. I'm an enrolled agent, and my business is Bastion Business Tax. And if you'd like to schedule a 15-minute discovery meeting, you can go to my website, click the link below, and it'll take you to my website. And you can learn more if you like and subscribe. I'll have more tax tips, and hopefully you find these educational and helpful. Thanks.